Imagine waking up, opening your favorite banking app, and seeing a balance of zero. For 100,000 people in 2024, this nightmare was real. $96 million vanished into a digital void without a trace. These victims included parents saving for tuition and retirees managing fixed incomes. They relied on popular, modern financial apps that promised ease and security. Users felt secure because of this logo. When a digital account displays an official government seal stating deposits are insured up to $250,000, you assume that money is sitting in a regulated federal system. But the clean interfaces on these screens are cosmetic. The apps you interact with daily are not financial institutions. They do not hold cash in their own vaults. This specific crisis involved three distinct layers. At the top was the consumer app. At the bottom was Evolve Bank and Trust, the actual vault. Sitting between them was Synapse, an invisible middleman providing banking-as-a-service software. Trusting a beautiful app design without understanding the hidden plumbing beneath it leaves your capital vulnerable to risks that remain invisible until the moment the system fails. To find where the money went, we have to look below the user interface to see how individual deposits move through the pipeline. Synapse bundled thousands of individual deposits into one unified data stream. This flowed into a master account at Evolve Bank, an anonymous pool where money loses its identity. Therefore, Synapse maintained a private digital ledger, the only map proving which fraction belonged to which user. Under this architecture, your financial security relies on the mathematical accuracy of a middleman's private records. In mid-2024, the map failed. Synapse's internal records began drifting away from the actual capital reserves held at Evolve Bank. A minor misalignment in high-volume code compounds quickly. Over time, these small errors cascaded into millions of mismatched financial records. At the height of the crisis, Synapse's failing software began sending fabricated data to the partner bank. The ledger showed balances that did not exist in reality. When Synapse declared bankruptcy, the system froze. All data synchronization between the app, the middleman, and the bank halted instantly. When the dust settled, Evolve Bank discovered the middleman's ledger was corrupted. Without a valid map, it became legally impossible to return the pooled funds to the correct users. The final toll was $96 million unaccounted for, trapped in a fragmented digital void. This wealth was not stolen by hackers or malicious actors. It was erased by compounding mathematical negligence and a fragile, disconnected architecture. A legal battle erupted as the consumer apps, Synapse, and Evolve Bank traded blame. While they argued in court, the victims remained locked out of their life savings. These users discovered a regulatory gap. Because Synapse was classified as a tech company rather than a bank, traditional government insurance did not automatically trigger. The FDIC protects you if a bank fails, not if a middleman software breaks. This failure highlighted a systemic risk where companies move money like banks but are regulated like software firms. As we move through 2026, this middleware loophole is facing new federal requirements for transparency and real-time ledger auditing. For investors today, the lesson is clear. Bypass the marketing interface and read the fine print to identify the true partner bank holding your funds. Leaving capital in pooled accounts managed by unregulated third parties creates a point of failure that federal insurance may not cover. The modern bank vault is built from code. In this digital economy, an investor's security is only as strong as the system's weakest link. You must investigate the fine print of your financial apps. Identify the exact name of the underlying regulated bank that is actually holding your wealth. In the modern era of finance, the glowing numbers on your screen are not actual money. They are merely a digital promise. And as 100,000 people recently learned, that promise can be broken in a millisecond.